Hey guys, and welcome back. Today I'd like to go over the argument for why Bitcoin in 2018 might be headed towards another crash. Through this, we'll just look at the Bitcoin chart here and possible ABC setup here. So here we have Bitcoin as it's currently trading, and uh, part of the possible argument for this is that we'll follow an A up to another B wave here and down to a C. And we'll subdivide that into this was the first A wave, this was the first B wave correction, with it subdividing into an A, B, and then C down. And then we'll have a 5 wave impulse move up. So here's the major 1, 2 subdivided into 5 waves, and to 3, 4, and then up towards a fifth. And then once it hits there, possibly at the 1.618 Fibonacci extension here, we could hit a double top as well near that range, and then possibly collapse back down into a C wave. Projections for this would probably be around 11,000 towards 10,000-ish area. A low estimate would probably be 8,000, but probably not much further than that, as that would serve as a great opportunity for a lot of investment buyers to find some base and get back in at a lower price. So part of the reason for this argument is the fact that um, if this was just like an A, B, and then C wave here, it's a truncated C wave. So this would have to be ideally lower. As you can see in this C wave, it comes much lower than this A wave. But here, if we counted this as an A, B, C wave, this is much shorter than this A wave here. And some could argue that this was just a flash crash and the real base would have been here for the A wave, in which case C would have come much further. Another issue is how you subdivide this. And you could look at this as that was the A point here, B wave, and then a C wave here. Or if you're on the bullish side, this would have to be a 5 wave move. So it would be 1, 2, 3, 4, and then a 5th wave here, subdivided into another 5 waves here, which you can make the argument for both. However, when we look at Ether, we can see that this truncated C wave is not out of the realm of possibilities. So when we look at Ethereum here, you can see clearly that this was a flash crash, and in which case this had to be a truncated C wave, because you can see this pop above. So if this was the previous high, you can see it clearly made it past. This is clearly an impulse wave move higher because of just the amount of force, not a lot of overlap and choppiness in the wave structure here, and we're clearly headed up higher. We'll see how this plays out in the future, but again, this is just a projection to where a 5th wave might end, notably higher. And this is another scenario, a very bullish scenario that Bitcoin may follow in the footsteps of, or just so we're aware of the possibility and a possible correction in the Bitcoin market, we could see this just collapsing down into another C wave forming. And part of the argument for this, that Bitcoin would collapse further, is an article out of Zero Hedge here, where we see Bitcoin futures traders are quietly building a short position, and through the article, it's arguing that big players are accumulating, basically betting that the future price of Bitcoin will go down in the future. And these are related to big bank investors and some of the big name players out there. So they have a lot of capital to throw around, and in which case it is possible that they might be able to move the market lower. But one notable chart here is that we're seeing the other cryptocurrencies catch up to Bitcoin. So you're seeing them outpace the market capitalization on Bitcoin, which can cause the decrease of Bitcoin while simultaneously causing the increase of other cryptocurrencies. So it's a possibly a good time to diversify into other cryptocurrencies rather than just stick to Bitcoin. But again, we'll have to see how the chart plays out here. And please check out the latest updates on the blog for how this might play out. Thank you guys. God bless.